Hey everybody, it's Jack and welcome back to another portfolio update video. It is the weekend, so it is that time of the week to go over my portfolio and show you all the progress and how we did this week. If you're new to the channel and wondering what it is exactly that I'm doing, well, I'm undergoing a WealthSimple challenge where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing. So I deposit around $200 into my portfolio every single week on a consistent basis in order to continuously invest into the stock market at regular intervals and hopefully beat the market. If you've been watching me on this journey and you've been contemplating whether or not you should take the plunge and start your own challenge, I highly recommend doing it. There is going to be a link down below in the description to sign up with WealthSimple, and when you use that link, you're going to get 2 free stocks, and these stocks can be anywhere from $5 all the way up to over $4,000 in value. So it's a great deal. I love WealthSimple. It's one of Canada's only $0 commission trading platforms. You really can't beat that. So quickly, just touching on the stock market in the week that was, it was a pretty strong week for both the Canadian and US stock markets. Surprisingly, they both finished the week up over 1% respectively. We keep hearing that there's going to be a correction or the stock market's going to crash, and it just keeps on pushing those all-time highs, which is great as an investor. However, it is going to be one of these days where we hope to see a little bit of red so we can get some better deals on some of our favorite stocks. But anyways, let's jump into my account status and show off how my portfolio has been doing. So as far as my account status goes, my account currently sits at $9,291.98. On Friday, we were slightly down $5.60 or 0.06%. And for the actual week, we were up for the overall week, as we should be. If the stock market went up, hopefully our portfolio goes up. Otherwise, we're doing something wrong. So we were up $36.84 or 0.4%. And this is due to the fact that we actually had some of our stocks go up, but a few of our larger positions came down, and it kind of took away a little bit from the overall stock market profits, as the overall stock market, like I said, was up over 1%. So jumping into the actual month, how we've been doing the past month, we're up $54.60 or 0.59%, as it has been a little bit of an up and down month. However, we have started to turn the corner, and it looks like we are starting to push those all-time highs again. So it's definitely in the upwards direction, even against what everyone's been saying, that there's going to be a correction sometime in the near future. We haven't seen any signs of that yet. Because in terms of our all-time performance, our account is actually doing better than ever, and we are up $474.15 since we actually started this journey about 6 months ago, and that equals to a 5.38% increase. So that's a half a year up 5.38%. We're on target to be up, if this keeps up, and the other half of the year, around 11% on the year, which is great. We'll take that double digits. So overall, I'm super happy with how the portfolio has been going and the progress we've seen. We're really starting to see that snowball grow on the dividend side of things. We have a lot of dividend stocks, and they're slowly starting to gather up steam, and we're starting to see that snowball grow as that passive income comes in every single month. So with all that being said, let's now jump into the actual specifics of the portfolio and look at the actual breakdown of all of my positions and how they've been doing over the past week. So jumping into my portfolio spreadsheet, let's kick it all off with going over my portfolio breakdown and all the stocks that I own, and primarily focus on all the stocks that I added to last week. So starting it all off at the top, I did purchase a share of Algonquin Power and Utilities, as it did see around a 2% dip on the week last week. It did take a little bit of a hit. I said I was going to pick up a share of QQC.F, my NASDAQ 100 ETF. I ended up going against that and instead buying 1 share of Algonquin Power and 1 share of TD, as both of these positions dropped around 2% on the week. TD had earnings come out, dropped around 2% on the earnings. And because of this, I really wanted to focus and pick up some of my largest positions and my favorite dividend growth stocks on the decline and bring my average cost on these positions down a bit. So I did just that. Again, I picked up 1 share of Algonquin Power and Utilities, and TD Bank, one of my favorite Canadian dividend stocks out there. I picked up 1 share of TD. And as you can see, they both make up 7.8% of my portfolio. So these are my 2 largest positions within my actual account. And then the next 2 dividend stocks that I picked up that were on my watch list last week were Enbridge, ticker symbol ENB, and Smart Centers, a real estate investment trust, SRU.UN. These are really high paying dividend yielding stocks. So they really add to that passive income aspect of my portfolio. So I picked up 1 share of Enbridge below $49. And as you can see, it's currently trading close to $50. So that was definitely a really good pickup. And Enbridge now makes up 5.2% of my portfolio. And when it comes to smart centers, I picked up 2 shares of smart centers. I absolutely love picking up smart centers when it's under $30 per share. I think it's a no-brainer for the passive income aspect. It pays a monthly dividend. So picking this up under $30 is usually my go-to. And I have 17 shares of smart centers, and it makes up 5.4% of my portfolio. And then there's actually one more dividend stock that I picked up last week. It's Kirkland Lake Gold, ticker symbol KL. Again, with the markets being a little bit all over the place, I think having a hedge against inflation and against the stock market going down in a gold mining stock or gold in general is a good idea. So I picked up one more share of Kirkland Lake Gold, as it also saw quite a bit of substantial dip early in the week. It dropped around to $48 range. I picked up a share. It's now trading back up near $50. So again, a really good pickup. It now makes up 4.7% of my portfolio, and I'm really happy with that. So the rest of the stocks I picked up are in my growth stocks, my kind of high growth penny stock plays. Again, one of my newer positions is Data Communications Management Corp, ticker symbol DCM. This is a position that I've just been averaging into over the past month or so. It currently makes up 2.5% of my portfolio, and I think I picked up a substantial amount of shares last week, around 20 to 30 shares, as it was trading down. It went almost down to $1 per share, so I made sure to cop some shares at that price. It's come up a little bit. Again, I'm still averaging into this. I'm still planning to buy more DCM over the coming weeks. And if you didn't see last week's update, I actually said that I'm talking with the CEO. I'm going to be sitting down and interviewing him over the Q2 earnings and just asking about how the company is moving forward. So I definitely recommend staying tuned for that. We're going to be filming it sometime this week, I believe. And if you have any questions that you want me to ask him, he's a really great guy, Richard Kellum. He's their new CEO. Definitely drop it down in the comment section below. Comment what questions you'd like me to ask him, and maybe I'll pick a few from the audience and I'll ask him in the live interview. The other growth stock that I focused on adding to last week is Greenlane Renewables. And this is another one of my favorite penny stocks out there. It's a renewable natural gas company. So I really think over the coming years, as we shift away from the natural gas, looking to more renewable and sustainable options, I think Greenlane is positioned extremely well to capitalize on this. And they've just been seeing great growth quarter after quarter in revenue, and the company in general. Under $1.50, it's currently trading at $1.46. I think this is a great buying opportunity for Greenlane Renewables. I added around 20 to 30 shares of Greenlane Renewables under that $1.50 mark. I do seriously think this is a $3 to $4 stock in the next few years. So I'm happily buying at these prices, and it now makes up 3.2% of my portfolio. Those were all the stocks I added to last week. So let's now hop into my dividend tracking and how my passive income is actually growing over time from buying these dividend shares. So we can see that last week, my annual income was around $265. It's now sitting at $283. So just in 1 week of investing in dividend shares, we added over $18 to our passive income every single year on an annual basis. And that equates to a $1.50 increase in our monthly average for passive income in terms of passive income by just buying a few shares. And as this grows over time, we're just reinvesting all of those dividends back into our account, and it's just going to grow and grow and grow and snowball. And we can actually see this growth starting to accumulate. If we look at this visualization of the monthly dividend income, it started off really slow at 60 cents. It went up to $8, back to $1.80. But we're going to slowly see as the months go, this is just going to continue up in the upright direction and really increase month over month over month. And it's going to start to exponentially grow as we start to reinvest those dividends, and they become more dividends, we reinvest them, and it just continues on and on and on. I can't stress this enough. This is the impact of dividend investing. It's a long-term process, but if you just stay consistent, it's going to pay off, and it's a great way to grow wealth over time. So now looking at our portfolio breakdown chart, where we can actually see how much each stock position in our portfolio has in terms of weighting in our account. And like I mentioned earlier, Algonquin Power and TD are our 2 largest positions, both at 7.8%. We then have TELUS sitting at 7.3%, and then VDY and CNR, Canadian National Railway, both sitting at 7.2%. So now looking at sector allocation and how the actual sectors are weighted in my portfolio, as usual, utilities, financials, and renewables are the highest industries or sectors in my portfolio, sitting at around 13% each. And then we have my ETFs, my safe and growth ETFs, sitting at around 10% each. And then it slowly goes down from there with telecom, oil and gas, REITs, industrials, all sitting in that 5 to 7% range. And our final chart is our asset allocation, where you can see the breakdown between dividend stocks, growth stocks, and ETFs in our portfolio. And as you can see, we are over 2/3 dividend stocks at 67.7%, 20.9% is ETFs, and 11.4% is growth. I am slowly trying to get that growth percentage back up to between 15 to 20%. That's more of where I would rather have it. And we're going to aim to achieve this by hopefully adding one more growth stock position into our account over the coming weeks, as you'll see in our weekly watch list. So that leads into the weekly watch list for the week ahead. A lot of the things I just mentioned are going to be shown in this weekly watch list. So you can see my top two for growth are my NASDAQ 100 ETF, QQC.F. I want to add one more share. I planned to do it last week, but then early in the week, it popped off and went from like $122 per share all the way up to $126, $127 per share. So I'm hoping to see a little bit of a pullback in tech and the NASDAQ 100. So I can pick up one more share, ideally around $120, but we might have to bite the bullet and get it at a little bit higher. And then we also have my Canadian tech ETF. This is a great way to get exposure to a lot of the major Canadian tech companies in one go through XIT. So I want to add one more share to get some more exposure to Shopify, Constellation Software, OpenText, and a few others, some great Canadian tech companies. So I'm gonna add one more share, hopefully in the coming week. And then a brand new stock that I have on my watch list, I'm keeping a really close eye on it, is Trulieve Cannabis, ticker symbol TRUL, Truel. This is a cannabis company that has been getting absolutely demolished over the past few months. It was trading around $60 per share. It's now in the $34 range, so it's almost half price from where it was a few months ago. And this is really because we've seen a sell-off in the cannabis sector in general, as well as Trulieve has had a lot of things come up in the news that aren't positive. The actual CEO's husband was in a big scandal. It came out and he was actually found guilty a few weeks ago. However, it was nothing related to Trulieve Cannabis and the company. A lot of people thought there was ties between the CEO and the husband. If the husband is guilty, the CEO must be up to some shady things. However, she was investigated and found not guilty or not involved in any of her husband's activities. So it really didn't affect the underlying business of Trulieve. However, it has affected the stock price. So for this reason, I'm really eyeing it as a potential investment opportunity and one of my newer positions, because it is a company that has been growing revenue and its business extremely well quarter over quarter, like crazy. And then in terms of dividend stocks, really just focusing on some really solid dividend growth stocks in TELUS, ticker symbol T. I want to add one or two more shares, hopefully on a dip. It has been doing extremely well in my portfolio and is one of my best performing dividend stocks to date. So hopefully it dips a little bit. I can add a few more shares, boost up the telecom industry in my portfolio and my position in TELUS, as this is one that I want to have as a major dividend stock player in my portfolio for the coming years. And then the final stock on the weekly watch list is just a classic. It's Fortis, ticker symbol FTS. This is one of Canada's best dividend growth stocks. It's raised its dividend for, I think, 47, maybe 48 years straight. So this is truly a no-brainer for constant dividend growth and passive income in a portfolio. I highly recommend Fortis as a utility stock to own. So I'm going to pick up one more share over the coming week. So that was my weekly watch list. And just to recap, I'm closely monitoring Trulieve Cannabis as a stock to potentially start a position in, as they have really had a steep decline over the past few months with a lot of things going on in their news that I don't actually think affects the underlying business, because the underlying business has been seeing really great revenue growth and their fundamentals have been increasing in the right direction quarter over the last few quarters, which is great to see. So I'm definitely monitoring this and maybe going to start a position. And in terms of the other stocks I'm looking to pick up, I'm looking to add to some of my growth ETFs over the coming week. So my XIT, which is a lot of Canadian tech, as well as my NASDAQ 100 ETF, to get some more exposure to the US stock market and a lot of those big tech companies, which are just doing increasingly well over the past few quarters. They have been crazy revenue and income numbers. And then on the actual dividend side of things, I'm really going to focus on some of Canada's best dividend growth stocks, as a lot of dividend stocks right now are trading at pretty rich valuations and near all-time highs, if not at all-time highs. So to counterbalance that, I'm really just going to focus on some of the best Canadian dividend growth stocks out there in the market and that I have in my portfolio by adding 1 to 2 shares of TELUS Communications, one of the best telecommunication stocks, and then also Fortis, a utility stock that is just a killer in terms of dividend growth. They almost increased their dividend for 50 years straight. They're sitting at, I think, 48 years of dividend increases, and they average around a 6% annual increase in their dividend. So this is a no-brainer to hold for years to come. and I feel safe buying it at these market and at these evaluations. So I hope you guys enjoyed this video and this update of my portfolio. As always, hit that like button if you did. It means a lot. And if you're new to the channel, make sure to subscribe. Lots more content coming your way. I'll see ya in the next one.